Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of Wall Street's most cryptic messages, because sometimes the most important truths are buried way deeper than any treasure map. Today we are diving into Altex Industries Incorporated, Altex's latest annual report, the 10K. This is their big yearly checkup where they lay it all out. We'll be dissecting their financials, looking for any hidden gems or lurking dangers, and we'll be keeping it simple. So buckle up. Alright, let's get straight into it. Altex Industries Inc. is a company that has been around for a while, originally incorporated in Delaware back in 1985. They are primarily involved in the oil and gas business through their subsidiary Altex Oil Corporation, or AOC. What is interesting is that AOC doesn't actually operate the oil and gas properties directly, but rather owns interests in them. Think of it like owning a small piece of a pie that someone else is baking. This means they rely heavily on what the actual operators tell them. Now, every company has risks and Altex is no different. They mention things like fluctuating oil and gas prices, operational hazards, and the uncertainties of reserve estimations. But what is really noteworthy here is their acknowledgement that they have no formal processes for identifying cybersecurity risks from their third-party service providers. With a successful cyber attack, they could face delays in important filings and financial losses. It sounds like their board is relying on their president, who surprisingly lacks formal cybersecurity training, to handle these very critical risks, a single point of failure there perhaps. When we look at their properties, Altex has a small amount of oil reserves, about 2,400 barrels, mainly in Wyoming. They also own very small mineral interests in Utah. What is telling is that they didn't participate in drilling any new wells in the last 2 fiscal years, and as of November 2025, they aren't engaged in any active oil and gas operations. It seems like Altex is more of an investor in oil and gas assets rather than an active producer. Let's look at their production figures. For fiscal year 2025, Altex reported net production of 300 barrels of oil and 400 MCF of gas. The average price for their oil was $56.33 and for gas it was $2.79. Compared to 2024, where they produced the same amount of oil and gas, the price of oil dropped significantly from $73.67 to $56.3. That is over a 20% drop, which for a small producer like Altex can really impact their bottom line. The average production cost per equivalent barrel is listed as $0, which is quite unusual and likely just reflects their particular accounting of non-working interests. Their common stock trades on the OTC Pink Limited market under the symbol Altex. As of November 2025, they have about 3,400 shareholders. Importantly, they have not paid any dividends in the last 2 years. That is common for smaller companies, but it means investors aren't getting any regular income from their investment. Now, they did purchase some of their own stock in September 2025. They bought back 41,880 shares for about 29 cents a share. While buying back stock can sometimes be a good sign, showing management believes the stock is undervalued. At these prices, it might also just be a way to manage their cash. Let's talk about how the company is managing its finances and its overall performance. In fiscal year 2025, their operating activities actually used up $99,000 in cash. On top of that, they spent $12,000 to buy back those shares we just mentioned. This resulted in a decrease in their cash balance for the year. In fiscal year 24, they used $78,000 from operations, but had a net increase in cash because they sold some oil, gas, and mineral interests for $525,000. This portion of the balance sheet is quite interesting. At the 30th of September 2025, they had over $1.2 million in accrued expenses, and a huge chunk of that, $117,500, is owed to their president for salary and bonus. He is elected to defer this payment. This is a recurring theme, as last year the amount owed was also over $1 million. The president can essentially demand this money at any time, which could significantly impact the company's liquidity. Their general and administrative expenses jumped from $233,000 in 2024 to $320,000 in 2025. The reason given: a bonus expense and related payroll tax for the president, totaling $94,000. This again highlights the significant financial commitment to their top executive. Interest income derived from their cash balances slightly decreased from $128,000 in 2024 to $115,000 in 2025, reflecting lower interest rates. This isn't a major concern, but it shows how their earnings are sensitive to macroeconomic factors. Now, for the part everyone is really interested in, the actual financial statements. Looking at their balance sheet for the 30th of September 2025, their total assets are about $2.7 million. Their cash and cash equivalents stand at $2.5 million. This means a significant portion of their assets is just cash. On the liability side, they have about $1.4 million in total liabilities. A big chunk of that, over $1.2 million, are current liabilities, with the most substantial part being that related party accrued expense we discussed. Their common stock has a par value of $0.01. They have authorized 50 million shares but have issued and outstanding around 11.1 million. Their accumulated deficit is a staggering $12.45 million. This means the company has, over its lifetime, lost significantly more money than it has earned. This is typical for early stage companies, but for a company incorporated in 1985, it is a serious indicator of historical performance. Moving on to the statement of operations. For the year ended the 30th of September 2025, Altex reported total revenue of just $18,000 from oil and gas sales. They had operating expenses of $325,000, leading to a net loss of $192,000. This is a pretty stark contrast to 2024. Where they had revenues of $23,000, but a gain on the sale of assets of $525,000, resulting in a net income of $437,000. The shift from a net income in 2024 to a net loss in 2025 without the asset sale highlights their operational challenges. Their revenue is simply not enough to cover their expenses. Now let's look at the cash flow statement. In 2025, their operating activities used $99,000. Remember, this is cash going out the door just to keep the lights on. Their investing activities brought in no cash, and their financing activities used $12,000 for treasury stock purchases. Overall, their cash balance decreased by $111,000 for the year. Looking at their equity, it is clear the accumulated deficit is the dominant factor. While they have common stock and additional paid-in capital, the massive accumulated deficit weighs heavily on their overall equity. The treasury stock transactions where they buy back their own shares are a notable but small part of their equity movements. Under the nature of operations, they clearly state that their operations are significantly affected by changes in interest rates and oil and gas prices. This means they are very exposed to market volatility. They recognize revenue from oil and gas production based on sales dates reported by operators. Interest income is recognized when earned. They also get revenue from mineral lease bonus payments, but they classify this as other income because it is not a primary business activity and doesn't happen regularly. Here is a bit of a confusing part. Altex has significant deferred tax assets related to depletion and net operating loss carryforwards. However, they have a full valuation allowance against these assets. This means they do not expect to be able to realize these future tax benefits, likely due to their history of net losses. In essence, these potential tax savings are currently worthless. This is a huge red flag. In 2025, one customer accounted for 81% of their oil and gas sales, and another accounted for 11%. That means almost all of their oil and gas revenue comes from just two customers. If either of those customers decides to stop buying from Altex, their revenue could be decimated. For 2024, one customer accounted for 80% of their sales. This heavy reliance on a few customers is a major risk. They rent office space under an operating lease. While the cost itself isn't huge, they have the option to cancel with a 30-day notice and a termination fee. This shows a degree of flexibility. The lease also has provisions for the landlord to potentially reduce the term, which adds a layer of uncertainty. Here we see the book value of their oil and natural gas properties. After accumulated depreciation, depletion, and impairment, the net value is only $23,000 for 2025. This small figure reinforces the idea that their direct involvement in producing properties is very limited. Under legal matters, they state there are no known legal proceedings against the company or its officers and directors. This is generally good news, although they do acknowledge that litigation commonly occurs and adverse verdicts could materially affect their financial position. This section provides a look at their oil and gas reserves. As of the 30th of September 2025, they estimate 2,400 barrels of proved developed oil reserves. The standardized measure of discounted future net cash flows from these reserves is about $71,000. This is a very small number, confirming their limited oil and gas operations in terms of current production value. Now let's put on our investor hat and look at the big picture for Altex Industries Incorporated. What is the story here? Looking at the numbers, Altex appears to be a company struggling to generate meaningful revenue from its core business. Their reliance on a few major customers for their oil and gas sales is a significant risk factor. The fact that they have such a large accumulated deficit despite being incorporated in 1985 suggests a long history of operational challenges or perhaps strategic missteps. their significant cash balance while providing liquidity. Also highlights the lack of profitable investment opportunities or a clear growth strategy in their oil and gas operations, leading to them using cash for share buybacks at very low prices. The company's financial health seems precarious, with operating losses and significant debt owed to its own president. While they have a small amount of oil and gas reserves, their current production and the value derived from it are minimal. The cybersecurity points are also concerning, especially for a publicly traded company that needs to file reports on time. In terms of direction, Altex seems to be treading water, without significant investments in new ventures or a strong market recovery in oil and gas prices that benefits their non-working interests. It is hard to see a clear path to sustained profitability. Their strategy appears to be one of slow and steady, or perhaps just slow, with a heavy reliance on existing, possibly declining assets and continued deferral of executive compensation. It is a very lean operation with a single full-time employee. The main opportunities might lie in divesting their remaining oil and gas interests, or perhaps acquiring very different businesses that can generate consistent cash flow. But as it stands, the risks, particularly the customer concentration and operating losses, overshadow any immediate opportunities. The company's future direction is uncertain and seems highly dependent on factors outside its direct operational control. Alright, that is our breakdown of Altex Industries Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you see any hidden potential or major red flags we missed? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community linked in the description for more discussions and early access to our content. Thanks for watching, and we'll see you next time on Corporate Decoder.